Okay, hello everyone. Welcome to today's AgriFin webinar featuring the Africa Agriculture Trade and Investment Fund, or AATIF in short. My name is Valdete Berisha, and I manage the AgriFin webinar series here at the World Bank's Agriculture Global Practice in Washington, D.C. I'm glad to see many familiar names in the attendee list. So if you've attended an AgriFin webinar in the past, welcome back. For those of you who are joining for the first time, I'm happy to extend a special welcome. I hope you'll find the presentation useful and relevant to your work. The AgriFin webinar series is one of the key ways in which AgriFin facilitates knowledge exchange among agricultural finance professionals around the world. So each month we invite a speaker to share his or her expertise on various topics related to financing agricultural clients. And today, as I mentioned earlier, we're introducing the Africa Agriculture Trade and Investment Fund, which is an innovative public-private partnership launched by KfW on behalf of the German Federal Ministry of Economic Cooperation and Development, or BMZ. The fund is managed by Deutsche Bank. So we have 3 speakers today who will discuss different aspects of the fund. The first speaker will be Mr. Max Bock, who's Assistant Vice President in Sustainable Investments Europe at Deutsche Bank. Max will provide a detailed overview of the fund's objectives, structure, and its functions. He will also discuss the fund's different financing instruments and will highlight several investments made since AATIF's inception. Max's presentation will be followed by a short presentation by Mr. James Wabala, who is a sector specialist with Chase Bank in Kenya. James will provide the financial institution's perspective as a beneficiary of the fund. He will discuss the impact of the fund on his institution's agricultural lending portfolio, as well as share with us some of the lessons that they've learned to date. Finally, we will have the pleasure of welcoming our third speaker, who's Ms. Camila Castañeda Quintero, and she is going to speak on behalf of the International Labor Organization. Ms. Patricia Reiter, who was scheduled to be the original speaker, unfortunately could not join us, so Camila will present on her behalf. Camila will focus on the social and environmental aspects of the fund, and she will discuss how the ILO's partnership with AATIF fosters positive social and environmental impacts of agricultural investments. The presentation, since we have 3 speakers, the presentation will last about 40 minutes. And this will be followed by a question and answer session with a speaker for about 20 minutes. Please note that you don't have to wait until the end to ask your questions. As always, we welcome questions through the chat box, which is located on the right-hand panel of the screen. I will collect all the questions throughout the presentation and will ask them to the speakers, depending on who they're directed to. I truly hope that we'll be able to answer all of your questions, but in case we run out of time, please feel free to reach out to me or to the speakers after the webinar. Of course, at the end of the webinar, within 24 hours, we will also share the recording of the webinar and the PowerPoint presentation with all of the participants. We will end the webinar promptly at 10 a.m. Eastern Standard Time. So before I continue, I will turn over to Max, who will start the presentation introducing AATIF, and then we'll go on to James and then to Camila. Max?
Yes. Hello, everybody. So first of all, thank you very much to Valdete for the introduction and the organization of this event. Thank you also to the wider audience for their participation, and in the attendee list, I also see at least 1 or 2 persons who form part of friends and family of AATIF. So welcome. In terms of background, my name is Max Bock, and I work for Deutsche Bank within the asset management division. and our team is called Sustainable Investments and acts as investment manager to the Africa Agriculture and Trade Investment Fund, or AATIF. I was not part of the team when the fund was set up, but apparently AATIF was conceptualized during the G8 summit in Heiligendamm back in 2008. And in August 2011, AATIF was set up by the German development bank KfW, as Valdete pointed out, on behalf of the German Federal Ministry for Economic Cooperation and Development. If I now move to the third slide, I'll skip the agenda. You can see the fund structure. And on the right, as just mentioned, you see KfW as an anchor investor, and KfW provides public funding on behalf of the German government, the BMZ, and itself is the biggest investor as well in the fund. Other investors include Deutsche Bank itself, large German corporates, but also private investors such as foundations and clerical institutions. As you see in the middle section, the investors can invest into different share classes according to their risk appetite, A, B, and C. We can discuss this later. And in total, the investors have committed capital of approximately $170 million US, and thereof roughly $100 million have been subscribed by AATIF and dispersed to in total 9 investees. So moving from right to the left, we can see AATIF's activities in the middle. So AATIF as fund can invest either directly or indirectly into the agricultural sector. The gray box at the bottom, direct equity and debt, represents the direct way of investing, i.e. Providing debt to a project company, which can be, for instance, a rice farm, a tomato processing company, or a maize farm. And above you see the indirect, the so-called indirect investment channel, which can be either providing funding to local banks, such as yourself, which then on-lend the proceeds to their own customers, or as alternative via so-called intermediaries who, for instance, provide input financing to their own smallholders. So as mentioned, in total, we have 9 investees or companies where we provided debt, and there are 3 banks, 2 intermediaries, and 4 direct investments. And the smallest investment is approximately $1 million US, and the largest 2 are $30 million US. And as highlighted by Valdete, in order to reach the fund's goals, AATIF has several partners or stakeholders who you can see on the top left corner of the slide. There is, for instance, the compliance advisors, who are the International Labour Organization and the United Nations Environment Programme, who take care of social and environmental due diligence and who are also responsible for the monitoring of our investments. A second partner is the Common Fund for Commodities, which is an intergovernmental financial institution established within the framework of the United Nations. And the Common Fund for Commodities, or CFC, manages the technical assistance facility, which provides grant funding to our investees. And the clients, the investees, can then use this financing, for instance, to fund the training to improve their own SME capabilities. Or another example would be the financing of market studies, which we did for Bank, for instance, and or the drafting of, or the implementation of a strategy paper for a bank's agricultural activities. We did that for PTA Bank. And on top, CFC not only acts as advisor, but also is also invested in AATIF itself. And ourselves, the Deutsche Bank, is also a service provider to the fund via our role as investment manager. And here the important point to notice is that we are actually not the decision-making body of the fund, but the investment committee and the board of the fund take care of this. And the team, the core team at Deutsche Bank, has 5 team members and is headed by Astrid Manroth, who joined last year from the World Bank. Moving to the next slide, you will see the fund's mission and objectives. So first, sorry, that has not worked. Now, first, what is AATIF's mission? So in short, AATIF seeks to invest into the agricultural sector in Africa, and agriculture is widely defined, i.e. borrowers can be input providers, farmers, traders, processors, or banks such as yourself. And by providing funding, AATIF aims to increase the agricultural production or productivity, ultimately creating jobs and providing income to farmers and smallholders. There are three main objectives which are grouped below. One would be economic development. Key, for instance, is the funding gap, which we intend to bridge. The fund's intention is not to crowd out other financing sources, but the fund intends to step in when there is not yet a commercial financing source available to the borrower. Second objectives are the social development objectives, for instance, the creation of quality employment. And by quality, we are referring to jobs that are permanently available and also available in the long term. Obviously, the increase of household income, how can this be achieved? For instance, by providing financing to intermediaries who then provide input financing to their smallholders and by the output of the smallholders, i.e. Indirect employment of people. And the third block is the ecological or the environmental objectives. There's a two-stage approach in order to achieve that. One would be to exclude certain activities, for instance, no deforestation. And secondly, AATIF can reach that objective by partnering with UNEP, who supervises the investments, activities, and also the ecological impact. I will now move to the next slide, the investments. I would skip most of it because it will be partially covered by other slides. And on the left, you see the instruments we can offer to financial institutions. The purpose of our activities shall always be that we expect you or the financial institutions to use our funding for their own on-lending to their clients or sub-borrowers who shall be active in the agri sector. And in terms of instruments, it can be either senior unsecured debt or guarantees, but we haven't done this so far, and the so-called risk sharing. We did a risk sharing structure once for one client of us, and it's actually a combination of an AATIF loan, i.e. we provide financing, and a partial risk participation of AATIF in the bank's sub-loans, which they finance using our money. In terms of tenor, up to 10 years are possible, but until now we did 5 years on average, also for banks. And in terms of size, it's between 10 and 30 million US dollars, but our current bank investments with also one at 10 million, 25 and 30 million each. So I'll now move to the next slide, which shows, or as you can see, our geographical footprint across Africa. And as you see geographically, there's a focus on Eastern Africa, especially with our banks, such as Chase Bank in Kenya, PTA Bank in Burundi, though they have an important office in Nairobi as well, and finally Bank ABC, who are headquartered in Botswana. And we would be very keen to expand our footprint in Western Africa, and especially in French-speaking countries. The next slide is probably the most interesting for you, as it shows our criteria, either for screening transactions and secondly for structuring them. So some of the input is not necessarily important for banks or financial institutions, but we included them for the sake of completeness and because we think it might be interesting for you to understand our requirements, as there might be opportunities where we could jointly provide financing to certain projects. So in terms of screening, first of all, we look at the business plan, the historical and projected financials. So for banks, this would mean that we need to understand their activities, their strategy, and we'd require sound financials, i.e. it would be difficult for us to invest into a bank which faces operational or liquidity issues. In terms of size, as mentioned before, the minimum ATIF investment for banks would be 10 million. We could do smaller investments as well, but we try to avoid it because we think it would not be efficient use of resources, as regardless of the size of the transactions, this requires more or less the same resources in terms of due diligence efforts or legal costs as well. Next point is sponsor equity contribution. That's more relevant for direct investments, but in general we require 1/3 approximately of equity. Obviously, we expect a certain management and sponsor track record. Greenfield versus brownfield. We generally don't do any greenfield investments, so we would require the client to have already all permits available. Land shall be secured, and ideally there should be an existing infrastructure as well. The next point is very important, the country and strategic fit of an investment. As mentioned above, we seek a certain geographical diversification, i.e. we'd struggle to convince our investment committee, for instance, to do more transactions in Kenya or Kenya only. So the board or the investment committee might also decide that certain instruments or types of borrowers should be favored, or certain products should be not offered at all. So in the past, just to give you an example, we have not done any equity investment. Next point, AATIF SME guidelines. That's very important. The fund shall not invest in projects involving, for instance, involuntary settlements, land grabbing, or deforestation. But ILO can provide more details on that. And we have also certain restrictions regarding the AATIF assets, the assets of the borrower, i.e. the fund shall not invest into projects which involve tobacco or hard liquor. Additionality is important as well. As mentioned before, we aim to only provide financing if there is a certain additionality. That means the client is either not able to raise financing by a commercial means, or there's another special angle, such as the support to smallholders of the client. In terms of transaction structuring, investment instruments, typically we do senior debt. We could also contemplate mezzanine for direct investments. And as mentioned before, for banks, we look at senior debt and or risk sharing. In terms of currency, we would always have a preference for US dollar because the fund currency is US dollar, which then means that ideally the investee or the potential client has also US dollar denominated cash flows. In terms of pricing, that is clearly market-based, and we have separated this function, so our risk manager takes care of this. I'll skip tenor, I already discussed it. Repayment profile, that applies to both banks and direct investments as well. As a fund, it's difficult for us to deal with multiple drawdowns or complex repayment profiles, because each drawdown would mean that we need to approach our investors, which is a cumbersome process. And in contrast to a bank, who might be happy with early de-risking, we have a preference that the funds are deployed long-term. So to give you an example, if we look at a direct investment, a complex repayment sculpting with repayments every month might be struggling for us. In terms of collateral, for banks it's generally unsecured. For direct investments, it depends on the risks identified, and to be honest with you, also on the availability of securities, i.e. are there any assets or are they subject to a negative pledge? Guarantees from parent companies or operating companies are welcome as well, and we also look at share pledges or pledge of assets. Inter-creditor relations are crucial as well, i.e. questions would be, are there any negative pledges or consent rights of existing creditors? And most importantly, I would say the undertakings or covenants that we agree with the client. There are operational undertakings that we would need, but also SME undertakings, where Ido can provide more details. And for financial covenants, for banks, we typically look at the capital adequacy ratio or NPL ratio, loan loss reserve as percentage of impaired loans, or cost income ratio, for instance. I think in the interest of time, I will skip the next two case studies because James will also talk about his experience with AATIF. Okay, so over to James.
Can you hear me?
Yes, we can hear you, James.
Okay. Welcome you again to today's webinar. Thank you to the organizers, my fellow presenters, and all the participants in today. As Chess Bank, we are a privately owned bank incorporated in Kenya from it has been in operation from 1996, licensed and regulated by the Central Bank of Kenya. Our core business is SMEs, including agriculture, manufacturing, trade, building, construction, healthcare, education, and transport. With a group network of over 60 branches, 750 agents, we serve in excess of 400,000 customers globally. I'll talk briefly about Chess Agri portfolio. The Agricultural Financing Unit of Chess Bank, Kenya Limited, was established in 2012. Ideally, this is a young department that has been in operation for 3 years. The department is a critical component of Chess Bank's strategy that has been aligned to the Vision 2030 of transforming Kenya into an income economy. As of September 2015, Chess Bank had, through repeated personal financing, lent more than USD 10 million worth of AATIF loans to the food processing, tea, dairy, sugar, and maize sectors, with an additional focus on horticulture. The bank is already a leader in warehouse receipt financing in Kenya, that is mostly in maize in the North Rift and South Rift part of Kenya. The number of outstanding loans was approximately 260, with an average outstanding loan amount Chess Bank client of between 30,000 USD and 40,000. The bank is currently again in negotiation with AATIF because of the successful previous loan, which has enabled the bank to lend affordable loans to our clients, support lending for agricultural equipment and machinery. Our key drive is to ensure that agriculture in Kenya is mechanized to ensure that farmers get returns for their investment. Through the funding, the bank has been able to focus on key value chains in agriculture such as dairy, cereals, horticulture, and grow the loan book through serving small and medium-scale farmers directly and indirectly. The funding resulted in a gross growth of the bank loan book by 50%, with additional similar partnership that was just closed in the year 2016 at an asset book of USD 30 million. The facility structure. The type of facility that was advanced from AATIF was a term loan with a tenure of 5 years. The disbursement was done in 2 equal installments with availability period 12 months. The pricing was based on LIBOR. The purpose of the facility was financing of the agricultural sector customers, including but not limited to entrepreneurs, agribusiness companies, producers, cooperatives, small, medium, and large-sized farmers, as well as export-oriented producers in the agricultural sector. The key condition that we found different from the other financials was the implementation of social and environmental system, including which we require to hire or nominate and train a champion within or source from external. Chess Bank Social Environment Review. The bank established a formal social environment system which has rolled out to all the branches. Initially, we started by concentrating in 22 of our branches, which are mostly located in agri regions. Through 2014 and 2016, the bank's SME manager and SME coordinator closely worked with AATIF compliance advisors and consultants of DAG to fine-tune the different components of the study prior to its launch, including an innovative facilitated SME appraisal for agricultural loans below USD 100,000. Jointly, the training of front and back office staff in the use of SME procedure was implemented. Tools for the facilitated SME appraisal were developed, and social risk guidance document was drafted and tailored to the Kenyan concept. Ongoing study found technical difficulties in incorporating the SME checklist in the bank's credit system, which resulted in a number of delays in terms of back and forth getting information from the clients. Further, staff feedback identified the need for additional training for back office and the credit staff. Closer monitor. The other challenge that we realized was it requires a closer monitoring of the branch or the business development team to ensure that for all applications that come in as per the guidelines, staff are carrying out SME assessments on our clients. Some of the milestones achieved this year, we established the maize, tea, and potato sector information system through this funding, implementation of the social and environment guidelines. The agri-specific credit policy was put in place to enhance agricultural lending and grow the portfolio, which is a first in Kenya in terms of a commercial bank. Training of the agri team on agri credit finance case is an ongoing exercise. Signing of additional strategic partnership to enhance our lending within the agricultural sector. We are currently working with the following partners: John Deere Financial to finance tractors and agricultural equipment, East African Weighing Council to finance the warehouse receipt system, East Africa Malting Limited for input finance for contracted value farmers, Green Farming System growing South Kenya Solution, financing partnership with the Dutch consortium to finance SME horticultural growers to acquire enhanced greenhouse irrigation systems. For Kenya Seed Company Limited, we are financing the input finance for the contracted maize seed growers, and this one is assisting them to ensure that they're getting the best crop in terms of controlling the quality of the seed that comes out, in terms of the farmers being able to get all the input, including fertilizers, pesticides, the right seed, which is a key challenge, particularly in Kenya. Most farmers will do a guess and hope exercise in farming. So with this, we were able to empower them. Some of the lessons learned: we have improved our risk management systems because now both the credit and the business development team understand to lend to agriculture in terms of the agricultural cycle, which was previously not incorporated in our applications. Improved the efficiency through training of agri staff. It has improved in terms of turnaround times and the quality of applications that are coming in. In addition to this funding, we have been able to onboard new customers and book new facilities under them. We have been able to carry out sector studies and diversify into new sectors. The impact on the knowledge of the agri staff within Chess Bank has been excellent. They are now able to handle all agricultural related matters. Thank you.
Thank you, James. Now we go over to Camila.
Yes, good afternoon, everyone. So I will start by
Camila, we lost you.
Can you hear me now?
Yes.
Okay, sorry. Great, then I'll start again. Good afternoon to everyone, or good morning. I will start by explaining what this collaboration with the AATIF is about. So the International Labour Organization, for those of you who might not know, is a specialized UN agency that promotes social justice and labor rights. And we have been working with financial institutions for a very long time, mainly with microfinance institutions, as we have found that working with these institutions is a very good way of promoting the decent work agenda. And we have learned a lot of lessons, but also had success stories. The reason for this collaboration was that when discussing with financial institutions, we saw that there's an interest more and more in taking into account social and environmental aspects in their investments, but very often there's a lack of capacity, especially on the social side. So the aim of this collaboration project is to build capacity for social and environmental risk and impact management. And for this, we have partnered with the United Nations Environment Programme, as Max said. The collaboration mainly entails 5 main components. The first one was to bring the social and environmental guidelines from the fund, which were based on the IFC performance standards, up to date with international law. The second one, it's linked to this a bit, like how to bring this into, make it more tangible or apply it. And it's basically how you can assess for new investments or potential active investment partners, how to assess what are the gaps between their current activities and the safeguard guidelines. For this, we have developed an assessment methodology. There's also, well, when doing this assessment is not just about finding what are maybe the risks, also the positive aspects, how to mitigate risk, how to enhance the positive aspects, and also provide recommendations on how this can be done. So this links to these social and environmental studies, where what we try to look at is, from these recommendations we've given, is it effective? Is it working? Does it have a positive result? And I'll give an example in a few slides, which is actually from Chase Bank. Then we have also, Max mentioned that the AATIF has this technical assistance facility, and we work a lot with them to support investments, especially on the social and environmental aspects. Sometimes, of course, the technical assistance might be either something where we are stronger, for instance, on social aspects, so we do give like this small technical assistance directly to the active investees. In the case of Chase Bank was creating a social guidance note that could be used by the back office staff to assess the risks of investments. And finally, based on all these other 4 components, the idea, or what we're working on, is developing training materials that can be used by a broader audience of financial institutions that are interested in responsible finance. So I will now briefly talk about the AATIF safeguard guidelines, and will not do so in detail because I think Max already mentioned a couple of things. For those of you who are familiar with the IFC standards, you probably see it's more or less the same. Well, let's say the pillars are the same. The first main aspect is having a social and environmental management system. That is that the investment, whatever it might be, a financial institution or a commercial firm, that they have the ability to identify, assess, and manage their own risks, and also enhance any beneficial impacts. The second is, of course, labor and working conditions, that is protecting basic rights for workers and preventing child or forced labor and discrimination. In terms of community health and safety, also minimizing risks and impacts that to communities. As Max said, the fund is a bit strict in relation to involuntary resettlement to, like, for instance, national protected areas and indigenous people, as the fund's guidelines preclude investments where there's a major adverse impact on these, also in cultural heritage. And finally, in terms of pollution and abatement, basically monitoring and diminishing the amount of pollution to air, water, and land, which is very important to consider in agriculture. As for these guidelines were basically, they apply for all of them. Now I want to talk about what's the focus for financial institutions. Of course, you might think, okay, biodiversity, what does that have to do with financial institutions? And the risks are usually not that direct. They are mostly happen through the on-lending. So the main aspect for financial institutions is to look if they have or if they can implement or willing to implement a social and environmental management system. So it's basically a set of procedures, of policies and tools, and also an organizational capacity for implementing them that will allow them to identify social and environmental risks and maybe exclude investments that might not comply to these guidelines, and also to include it as part of the covenants or to foster improvements in their investments. And of course, for them also applies labor and working conditions, and having a system of dealing with external communication from other stakeholders on social and environmental issues. Finally, I want to finalize by bringing sort of two examples. One is from Chase Bank, and I will not dwell on it because James has already mentioned a couple of things, but it's just to see how this looks more on the financial institution level. So in the case of Chase Bank, they initially did not have a formal social and environmental management system. As James said, it has already been rolled out to all the branches. We have, in this case, and what we worked with Chase Bank was that they usually have this loans that are considered low risk because they are below a certain threshold, in this case $100,000. And what we wanted to do is not just let them assume that they are low risk and not assess them, but we actually developed together, let's say, a facilitated appraisal to assess the risks of this low risk or sort of low quantity loans. And in order to assess the effectiveness of this appraisal, to see if it makes sense, to see if it actually, it does give information to the bank, or it's able to capture the risks and impacts of these small loans, and also to see if it's effective in terms of triggering changes in the clients. We have done an SME study. At the moment, we have just finalized the baseline, so there's not that much information, but we have seen that there is, in this SMEs that Chase Bank on-lend to, there's a high awareness of the benefits of managing social and environmental risks, and that there's a link between social risk and environmental risk. Like, if a firm will have a higher social risk, they will also have a higher environmental risk. Well, as I said, these are just first results, but hopefully in a year when we do the end line, we'll have more information. And finally, the last slide is on another bank where AATIF has invested. It's Bank ABC. And in this case, the bank, when AATIF came in, they already had a social and environmental management system, but it was a set of tools that were generic and were being used, like the same tools for the 5 countries in which they work, which of course have very different contexts. So at the moment, we are working with them and the technical assistance facility from the AATIF to improve or enhance this existing system by, for instance, adapting these tools that they already have to the country's context, to legal regulatory context, for instance, in terms of if you want to check on child labor, what is the minimum age, and also very important is to develop a social and environmental training strategy so that the staff have the capacity to do this. And also an important part for us is to see, well, we will provide this help, or the fund will provide this help, but there has to be also a commitment from the financial institution to ensure that there is a sustainability. In this case, for instance, Bank ABC has committed to hire a group coordinator that will oversee these improvements and this SENS implementation. Thank you very much.
Thank you, Camila. I'm going to start asking a few questions. I'm going to start asking questions based on the order of the presentations. And I think the first few questions are directed to Max, and they have to do with, requesting more clarity on a few things about the fund. And one of them comes from Mr. Dan Zook, who wants to know how much has been contributed to the senior tranche of the fund as a percentage of the total capital raised, and what is the profile of those investors? Max?
Can go to our website. You see the link on the last slide of the presentation. The most senior tranche, i.e. the one which has been labeled as A, accounts for approximately 20% of committed capital.
Sorry, Max, can you...
sorry.
We weren't able to hear you at the beginning.
Okay. Shall I move to the relevant slide as well?
Yes, please.
Okay. Sorry, I'll repeat that. The most senior tranche is tranche A, which you see is the top box of the second section. Accounts for approximately 20% of committed capital of the fund. That's based on June 2015 figures. And as mentioned on the right, those are private investors, such as clerical institutions, i.e. churches, but also foundations, and a larger German corporate who has recently invested. Yes, but unfortunately I cannot share with you more details regarding the financing conditions.
Okay. Thank you for that. I will ask you the next question, which has to do with an initiative called AgriFinance. And this is a question that comes from Francois Stepman, and he is asking whether there is any relation between AATIF and AgriFinance. This is not AgriFinance. This is just AgriFinance. And it's a new initiative of the European Commission that aims to increase investment in smallholder agriculture and agribusiness. I'm not sure if you're familiar with that initiative. The attendee is saying that it will be launched in 2016, okay. and he's asking whether there's any relationship between AATIF and AgriFinance.
To my knowledge, not yet, but thank you for the question and the hint. But I think we don't have any existing working relationship with AgriFinance. I can ask my colleagues, but please feel free to reach Francois to reach out to us as well. I think we have included our email addresses on the last slide of the presentation.
Yes. The contact information will be shared with everyone at the end of the presentation.
Okay. Yeah.
Yes, please feel free to connect bilaterally if you have additional questions on that particular aspect or any other aspect with any of our speakers. So the next couple of questions are directed to James. One of them is from Hannah.
Apologies, but because there was one question which has been privately asked. I presume you were not able to see it. It was from Anita Campion.
Okay.
Can I just answer that question?
Yes, absolutely.
Okay.
Go ahead.
Thank you, Anita, also for your question. It's actually a very good question because a lot of people ask that. The question is, do you offer any grace periods on direct investments? And the answer would be, well, depending on how you define grace period, but if we look at interests, so the answer would be no, i.e. we would not accept any interest roll-up, which adds to the notional, but we would expect the client to pay interests from day one. And if you define grace period as no repayment of the notional, then there we would, as mentioned during my presentation, would be flexible, because we as a fund, we are happy to look at longer maturities, and it's also fine for us if the repayment or the de-risking of our exposure only starts after a couple of years. Thank you.
Okay, great. Thank you, Max. So the next question I'm going to read is going to be for James. The attendee, Hannah Sir, is asking if a little bit more about the social and environmental assessments that the Chase Bank staff have been trying to carry out. How long does this take? How often? And using what measures? These might have already been addressed a little bit by Camilla and James, but if you can just summarize, James, that would be great.
Okay. The measurement is, the initial was a project in terms of study. What we did was we settled on a number of 100 clients. We have not completed that in terms of meeting the target, but we have done 60, whereby we apply a number of applications, 50% of the application to the social and environmental conditions, and we also lend separately without applying the condition. Then, after the study is completed, we are going to compare that. But in terms of the local government regulation, this is a key component, because even the local and the county governments are getting into checking in terms of the conditions of how the farmhouse run, what kind of labor is employed, what kind of funding is done at those levels. So they are actually participating, and as a bank, putting these exercises in place, it helps us work and expand our lending to the counties and get the participation from them without any restrictions.
So the question also was, how long do these assessments usually take?
In terms of assessing one client, it is automatic. It takes like a day, because it's just a checklist that we confirm that these conditions have been met, and then we compare with the standard set. It's a one-off. It takes a very short period to do that. Okay,
great. So the next question is also for you, James, and this one comes from Srini Sundaram, and he's asking, when it comes to scaling, what are the biggest challenges or areas that are of strategic importance to you? That means, do they have to do with marketing cost reduction, credit risk assessment and scoring, or in operational automation?
Mostly it is on credit risk management. That is where we have the most concentration. In terms of marketing, nothing, we didn't do anything outside what we are doing, but it was only under credit that we had to train our credit approvers to be able to apply the conditions.
Okay, so there's another question from Anita, who is a participant, and she is asking about measuring the income change. Can you please, either Max or I guess Camilla can talk about how do you verify increased incomes? Is there a way to do it, or is it just assumed to happen as it's linked to on lending?
Yes, I'll take that question. So what we have done so far, now basically checking out the self-reported data, but starting from this year, this year. Well, with this year, the process started. Next year, we will start with a full-fledged impact evaluation on one of the investments that has an outgrower component to basically verify if there has actually been an increase in incomes. And parallel to that, we are working also to develop a rapid appraisal methodology to do so also for the other investments, maybe not like an impact evaluation per se, but at least to have a better information how the impacts in terms of income growth.
Okay, great. Thank you, Camila. I think the next question is also directed to you, and it's from Crystal Corpus. She's asking if a bank is unable to fully operationalize a social and environment management system, does that preclude them from receiving financing in the future? I guess it could go either to you or Max.
Yeah, I think, I mean, it doesn't initially preclude it. Like I said, when we started working with Chase Bank, they also didn't have one in place, or were just in the process of starting. So it's not like it's immediately precluded. We would, I think for us, it's important to see if there's this commitment to do it, if there are some steps taken towards it, and if, for instance, at some point there were difficulties in the process, I think the approach would be more to can the fund provide some help, for instance, through the technical assistance facility, and not right away say that it's precluded from investment. But I don't know, Max maybe there can give another or more information.
I think nothing substantial from my side. I just wanted to highlight that the borrower, i.e. in your case, the bank, which might struggle to operationalize the SEMS, has committed so under the loan agreement, i.e. Technically the fund would be entitled to take any actions, be it not dispersing any further funding or taking also more drastic steps. But in the past this has not happened, and we would always look for another solution, and as Camilla just pointed out, we don't expect the bank to have a 100% fully operational SEMS on day one. Okay, so related to that, Max and Camilla, if there has been any evidence, so this is a second part of the question, if there has been evidence of negative social and environmental impacts from a project, can you tell us who takes responsibility for addressing community concerns? Is it the fund manager or the local banks, the investees?
I mean, initially, or ideally, should be the local banks. That's why they would have also a system to receive such type of complaints. We have not had the case with financial institutions, but we have had the case with another investments where concerns were brought directly to the fund. So it can also happen. But I think we would think the best way is to start by the local banks or by the financial institution, which should have already a system in place to deal with this.
Okay, so this is also specified in an agreement?
It is, like, for instance, as part of the agreement or the facility agreement with the financial institutions, they are supposed to follow up on any aspects of social and environmental issues that might come up and inform the fund, for instance, if there is evidence of such a negative social and environmental impact. But yeah, I mean, they would have to inform us, and I think it's part of the agreement as well that they should put it in place as part of the SMs, that they should address community concerns. Okay.
Thank you, Camila. So at this point, I don't have any more questions that have come to me. I'm not sure if anyone has submitted any questions directly to you because of the options that are enabled in WebEx. So if there are any other questions that you received privately and you would like to, any of the speakers that you would like to address, that would be great. If not, as I said earlier, we will definitely share the presentation and the recording and related materials, and as well as your contact information if people want to get in touch with you bilaterally. So do you have, Max, James, Camilla, do you have any questions that have been addressed to you privately via the chat box that you would like to answer, or not?
Not me, at least.
Okay.
Nothing.
I have a question to answer. I have one question, Mr. Can you hear me?
Okay. Yes, I can hear you. So you said there's another question directed to you.
Yes, there is a question from Demiran.
Okay.
Could you briefly explain what you mean by establishment of maize, tea, and potato in financial system? Thanks in advance. What I meant was we are doing sector papers. What the sector paper gives you, it gives you the general overview of maize, potato sector in Kenya, and it introduces you to the sector. The paper discusses different steps in value chain from input suppliers to processor, which starting with business analysis followed by a financial analysis concluded the specific risks and mitigation for that segment. It also provides the business analysis of the market. It provides a detailed SWOT analysis of the sector, and it also gives the commercial bank, it identifies the financing opportunities available within that specific sector. So as a business development manager, when I meet a customer, I refer to the sector paper and I immediately identify where this customer falls. Using this, without necessarily myself having background in agri, I will know the opportunities and the solutions that I can give this customer. So it is a very key component that adds value to a commercial bank.
That's great, James. Thank you so much. And I also will share a link with everyone to our website where we have some of the some papers, similar sector studies that you can take a look at under the Tools Corner on AgriFinance website. I just shared the link via the chat box, so feel free to explore some of those materials to get an idea of how they look, and also to use them if you'd like to use them, to edit them as you like, and then use them in your own institutions. So there is no additional questions that I have at this point to complete the webinar. So I just wanted, unless Max, if you have any questions, please let me know, because I didn't hear from you.
No, thank you. Or
Okay.
No question.
Great. So I think this brings us to the end, and I just wanted to thank you everyone for a great presentation, and we'll send, within the next 24 hours, we'll send the materials and recording to everyone, and we'll post it on the website as well. Also, in order to ensure the quality and relevance of our future webinars, I would like to invite everyone to take a brief survey that is going to appear on the screen in just a few seconds. That will allow us to better tailor our future webinars for audience. So you should be able to see the survey on the right-hand side of the screen. Please feel free to answer those questions, as they would be really helpful to us. In the meantime, if you have any remaining questions, please visit AgriFin's website at agrifin.org or send us an email. And on behalf of the entire AgriFin team here in Washington, D.C., I would like to thank one more time all of our speakers for contributing to the knowledge exchange through this webinar. And so thank you for taking your time from your busy schedule to speak with us today, and thank you everyone for attending the webinar. And we hope to see everyone in our future webinars as well. So thank you.